Hello folks, this is Peter Maris of the Resource Financial Group. My team and I want to wish you a Merry Christmas or a Happy Hanukkah and a very Happy New Year to all. As 2022 comes to an end, we thought that it's time to talk about income taxes. So this month's topic is, you guessed it, preparing for the 2023 income tax season. First and foremost, I just want to let you know that next year, meaning 2023, is too late to plan. When you meet with your CPA in April of 2023, it'll be too late to do much more than simply pay your tax bill for the 2022 tax year. Once the calendar turns to the new year, your options are minimal. Taxpayers who do not have formal yearly income tax planning performed for them run the risk of not only paying too much in income taxes, but also missing out on opportunities as well. As clients of our firm, we feel confident in our income tax planning protocol and that you have done well to minimize this year's tax bill. There have been many important changes to the tax code, which likely means another complex and involved tax year. There are a few things you can do to help the filing of your tax returns and make them a little easier. First of all, please make sure that you have paid sufficient income taxes to the federal and state government to avoid an underwithholding penalty. The federal and state governments have very specific criteria that you must follow to avoid being assessed a penalty for not paying enough money to the government before you file your income tax return. Please keep in mind that if you file an extension after the April 18th, 2023 tax return due date, you owe taxes and don't pay them in full with your extension, that you may be assessed a penalty and interest by the IRS and potentially by the state as well. So if you do file an extension, check with your CPA to make sure you're out of harm's way. So, getting ready for the 2023 tax season, where do we start? Well, I want you to start by getting a large envelope and labeling it 2022 income tax data. As you receive income tax documents from various sources via U.S. mail, I want you to simply put them all in this envelope. You'll be looking for things like documents from the government if you're receiving Social Security, or your employer if you're still working. Simple, right? Well, one of the most common issues around tax time is missing information, so make sure you have all your documents in one place. It's very important. Secondly, if you have an online savings account with companies like American Express or Capital One, you may not receive a 1099 via U.S. mail from them at all. Now, this doesn't mean you don't have to pay tax. It simply means you have to download the 1099 from their website and place it in your income tax data envelope. When preparing to meet with your CPA, reach for your income tax data envelope and you'll have all the important documents and information that you'll need. Please keep in mind that any major life changes, such as the death of a spouse or the selling of a large asset, may have an impact on the amount of tax you will owe, so make sure to inform your CPA. If you're still employed, you have time to add and potentially max out the contributions to your 401k plan if you have not already done so. If you are short or on pace to be short, contact your Human Resource Department and let them know your intentions. They can help you to add or accelerate contributions to your 401k plan before December ends. The contribution limit depends on your age and other factors, so let us know if you're unsure about being short or maxing out. Also, these limits are increasing in 2023, so make sure you make the necessary modifications to your contribution schedule in January. Finally, we all know how important it is to pay our fair share of income taxes to live in a country as amazing as the United States. Sure, we have our issues as a country, but having done a fair amount of traveling, I've realized how fortunate we are to live here. So I thought you might find it interesting to know how your income tax dollars are being spent by the U.S. government. In 2021, the U.S. government brought in $4.8 trillion in revenue generated by corporate and individual income taxes. Yes, $4.8 trillion. Of those dollars, the main expense categories were as follows: Social Security, 21%. Health insurance and Medicare and Medicaid, 25%. National defense, 13%. Economic security, 11%. Benefits for veterans, 7%. Interest in our debt, 7%. Education, only 1%. And all other miscellaneous, about 10%. Pretty eye-opening, isn't it? Well, in closing, please remember you still have time to take some impactful actions to reduce your tax bill for 2022. Contact us or your CPA as soon as possible with your questions or concerns. Again, We still have some time to act, but the clock is ticking on tax year 2022. Well, folks, that's all for now for this month's video. Please remember that nothing in this video is a personal recommendation. If you're anxious about your income tax situation or you simply have a question, please call Ashley at the office. Let's set up some time to talk. We're here for you. Again, happy holidays, and here's hoping that 2023 brings us health, happiness, and of course, prosperity. Thank you.